This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we are seeing corn give back a little bit of ground, but I don't think it's anything to get too concerned about. It has been a stick in the mud here over the last week and a half, trading just a few pennies on 375, give or take, and really just kind of waiting for new news to come across the markets. We haven't really gotten any of that. I think the market is really underpricing in the fact that there's still potential of an early frost. Now, you don't want to go to the bank and bet the farm on that, but there still is that possibility of a frost, and that would certainly help prices get a little bit higher and firm up out above technical resistance. That resistance pocket that we're looking at, 377 to 380, we've been talking about it for the last couple of weeks, is a brick wall. If we can get conviction closes out above here, I wouldn't be surprised to see that spark around a short covering. The next line in the sand, well, there's really not a whole lot until you get back to that gap at 392 3/4. Now, on the soybean side of things, same type of deal. I don't think the market's really pricing in a huge weather threat at the moment. $9, psychologically significant resistance. If we can achieve consecutive closes out above here, I think that could potentially take prices towards 915, which represents the 200-day moving average. But more importantly, the 50% retracement, or basically the middle of the range from those contract highs to the contract low. So that's going to be something to keep a very close eye on there. Money flow and technicals still look pretty constructive overall there. On the wheat side of things, Chicago wheat, 492.5 is the resistance pocket we're looking at. If we can get out above here, it will mark higher highs. We've been kind of reversing the trend. Previously, it was lower highs and lower lows. We're starting to see the money flow shift and the chart kind of firm up a little bit. We're pretty friendly on the wheat futures, but I think there's probably a little bit more opportunity in that Kansas City contract. 410 has been kind of a pivot pocket for us. If we can start to achieve consecutive closes out above here, wouldn't be surprised to see that Kansas City December contract make a run at 430. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.